Everybody, what's happening? Happy Thursday. Welcome back. Just the last little stretch here for the final hour session. Chat is up and running. Wanted to walk through. I just finished up a double up alerts masterclass and want to shift everyone over into YouTube. So S&P 500, all the good priced in. Well, we just got paid on a nice little broken wing butterfly. Let me actually close that trade out for my Pulver alerts as well. I'm not sure where all of my browsers went. They're in here somewhere. Let's see here. Anyway, so let's have a look. So I'm watching this for the end of the day. I am out of these trades. We talked about this a lot in my double up service. So I put trades on this morning that either at 68.65, 68.30, or 6,900. We're looking for a profit trap. I closed out for a net $100 winner between the three. This is for the next 23 minutes. I'm just curious to kind of humor myself where it would have cash settled. So if we're down between like 35, 30, and 25, so this would be 68, 35, 30, and 25. That would be inside my nice little profit trap. That was a 15 wide. That would be close to $1,000 of profit. Let me see. So we're trading now at 995. That's up 350 bucks. That's not bad. That's not bad. Anything inside like 68, 35, 30, or 25 is over $1,000. So I'm going to be watching this closely. I put on this trade originally with an exit of, I think I put an exit of like 7. I got filled for 13.55. So I did like a 7.55 exit, but I didn't hold it that long. I just managed net profit because I want to take 2 small losses. But as the price gets better and better, we're in the final 20 minutes here. That magical butterfly spread or that iron butterfly is looking even better for profit. So let's see what this does. Let's see if this gets down to like, $5 debit. That'd be $1,000 winner on the day, or probably closer to like $800 because I did have like $145 risk. Okay, what's happening, Donna? How are you? So anyway, we'll watch this for the next 20 minutes. Everything is down for the day. I mentioned this. So if you took my broken wing butterfly that we did, this is a bonus trade that I issued in my Telegram not that long ago. I think we took this trade when? This trade is here. So I posted a trade on the 29th. What day was that? Was it yesterday? We took that trade yesterday. Huh. When did I post this thing? So I took this trade in the morning. All right. I guess I'm like, yeah, whatever, FOMC. So I took the trade yesterday morning, if that's right. October 29th, yesterday morning. It's the 30th today. The $1.35 credit closed out today for 30 cents. So $1.35 is the max credit. I closed it out for 30 cents. Made $105 in the last 24 hours. Not bad. It's about 78% return on credit. I'm happy with that. Also, not sitting here calling the top of the market. I will say this. I don't know if this is going to be continuation to the downside. I hope for once the technicals will actually do what I was expecting, which is I think price should be pulling back into these 2 moving averages. So it's not going to be easy. Believe me, like the market, when it sells off, it might be like the most boring, methodical, it might gap lower tomorrow and then finish the day high, but then it rolls over the weekend. I have no idea. I do know that the market should be able to hit the 21 period and the 50 period moving average. They have been really strong support levels for a while. I could see this being like the perfect little weakness window. We talked about this for months. We got the weakness window on October 10th, but we had 0 follow through. So I think what would be good for this market would be just a nice little correction. As long as it's like slow and steady and orderly, there might be some demand down here to buy the dip and take this thing into highs again for the end of the year. I think the market might still be gunning for 7,000, right? But everyone got super excited that in these 3 days, this thing pushed up. We're like, holy crap, we're at 69.20. Okay, the high was 69.20 yesterday. Wasn't 7,000. Wasn't above 7,000, but I think the market has a little bit of weakness. Let's see where our moving averages can offer support. 21 period has offered a lot of support. Can we get it again here at the 50? We're about to find out. Okay, now that 30 pin is offering 9. That's over $400 of profit now. It's not bad, not bad. Not bad at all. 920, 900. It's 350 a profit. This is all going to happen pretty fast in these final 20 minutes. So over $400 a profit on that 30 pin. And again, this is for like entertaining myself. I'm already out of the trade for a net profit of $100. We had a nice winner on daily profit play today. We also had a winner closing out on. We had a pinch point trade close out today for profit. I had one fill, one closeout. We had a newsbreakers trade. Let me see here for my pinch point. Pinch point, we had ITRI hit a profit target. We had the 35.8% return there. We had a trade fill at $3.43, or we got the trade filled on EHC for a cheap debit spread. It was like 240. I'm putting in the 343 credit. So another trade that was a pinch point trade. FFIV is in. Closed out NVIDIA on pinch for a winner. ITRI for a winner. Pinch and pinch. Just make sure I'm not missing anything here. Dow, we closed out for a winner. Cool. And UPS close. Yep. So Dow, ITRI, UPS, NVIDIA, all winners on pinch point this week. Tesla, CLS winners on newsbreakers. Double up, SPX, and another one today. Daily profit play was a winner today. Good stuff. Okay. Cryodex, what's up, brother? I know that name. How's it going? All right. That butterfly spread is now trading at 910. I'll come back to this in a moment. I've got my other screen running here. So I'll be watching this to see how close am I to my perfect spot price here is 68.30. That's a potentially a $1,300 winner. So if we're right around this level, that's perfect. I won't know this until the next 17 minutes. But if we're within like plus or minus 5 points of that, that's a pretty fat win, like $800. So we'll see what it does. So watch that here. I will move this. There we go. And now let's talk other stuff. So like I said, I think the market has room to drop. I hope that it does. I hope the all the good stuff kind of got priced in. I think there's still some stability here to get animal spirits, lift the markets up at the end of the year. 2026, I think it's going to be volatile, man. I mean, there's a lot of pressure for Mag 7 to be perfect. We saw that today. Look at your Meta, which is down a decent amount. Meta was a nice gap lower of like 10%. So Meta is down almost 11+%. I did put in a pending order today for, it was a bonus trade I did in my morning session. I put a trade in here for like the 610 by 615. It's allowing price to fall a little bit. If the S&P falls a little bit lower, maybe there's some follow through on Meta. I'm trying to get a nice level at the supply zone. Microsoft also fell. Despite beating earnings on the top and bottom here, Microsoft also fell. Take a look at Google. Okay, Google gapped way higher, but it's fallen $8 today. Take a look at Mags. Actually rolled over. This is a nice little pullback. Can we hit the 21 period? Can we hit the 50 period? I mean, this trend line, I would say if we're going to have like a little softer Mags, then sure, let's see this pull back a little bit. I still think that, look, you're silly to fade AI. I really think it's a trade that you don't want to short, right? I think that what is best is we need to see that there are hundreds of billions of dollars being spent on this AI chase. That is still good for growth. The bubble in 2000, 2001, these companies were making, valuations of 100 times sales and 50, 60, 70 times earnings on an idea, on a .com, right? They didn't actually make money. So it is different in the sense that our price to earnings, price to sales are not quite as frothy as they were back in the .com bubble. But it also was added into like there were some credit issues, and we've seen some private equity things pop up here in the last month or so. I don't think this is something that we fade. If there are hundreds of billions of dollars going into these markets or going into these this CapEx spend, that's a good thing for growth. I mean, think about where this data center AI build out goes. It goes to everything. You can't buy enough chips. You can't get enough computing power. You can't get enough infrastructure to build out data centers. I mean, from the material side to the utility side to the energy side to the semiconductor side to the computing power side, every piece of hardware, every piece of physical property to build the stuff out. Like that growth is broader than just tech. So I've said this for the last several months. I mean, I don't want to chase tech companies. Okay. We are heavily a tech-based economy. I mean, we have literally 40% of the market is concentrated in 10 companies. That's a lot of concentration. Okay. But they're also bigger than entire countries. I mean, what I see this morning, like I saw something like Nvidia is like 15% of GDP right now. Like it's crazy at $5 trillion. But is that concentration, is it concentration risk? Yes, of course. It's very much risky. But these companies also make a lot of money. And if they continue to make a lot of money and they're continuing to spend and it becomes a good investment, and this is like the arms race, whatever, we're also seeing a lot of companies that are kissing the ring. Literally, NVIDIA this week, is it Jensen Wang? Jensen Wang? He ended one of his meetings, his speeches this week with "Make America Great Again." I mean, if that's not like a bow to the Trump administration. Tim Cook did the same thing. It's like all these huge executives, huge companies are meeting with the president and meeting with the U.S. And somehow it's like, okay, you get in the good graces, everything goes well for you. So I think there's a lot of support in the markets, but we do need to have a correction. I hope that it's not much, maybe like 4, 5, 6%. We pull back to the 50-day from these recent highs. Okay, that would be about a 7, almost 8% correction on MAGs. Let's go to SPY or SPX for a second. Let's get down to the 50-period moving average here. That is a 2.6% correction at the 21 period. It is a 4+% correction, which we haven't had, by the way, at all. Okay, other than this pullback in May. This pullback in May was peak to trough about 3.4%. So literally, you have to be on the left side of this trend line with all the trade war drama. Ever since we got on the right-hand side of this trend line, up above the late part of April, we have not seen a pullback of more than 3%. 3% here, less than 3%. This was a 3% correction here, less than 2 and 1%. That was that technically the high low is like 3 points. So I'll point them out. These are all, see if this will work. Darn it. Right here, there's a 3% correction. There's a 3% correction. There's a 3% correction. If we pull back to the 50-day moving average, that's a 4% correction. Does that mean the market is broken? No, it doesn't mean it's broken. It means it's good support. I think the market will tell us whether or not support is going to hold. Look for a bounce. I think we get a bounce between the 50 and the 100 period to finish out the year strong. I think we can get there. Okay. I think the one thing you want to pay close attention to is that if we bounce and we don't reclaim the highs, a little bit of consolidation here, my concern is that that would be distribution. This distribution most likely means this thing rolls over into 2026 only for a how bad does it get correction, right? Could it be a 5 to 10% correction? Sure, all the above. Like we don't know. But November, December, typically very bullish. When organized, and I really mean this based on, the stuff we'll watch every single day, based on a nice, slow, steady, organized, maybe 3 to 4% decline. Maybe it's just like a steady few days in a row, and we have a pullback. Okay, well, if that pullback is met with some vigor, some support, some jumps later around like 6,600, maybe 6,600, maybe 6,500, if it's met with a lot of buying interest down there, then we get back to the highs. I mean, there's a nice opportunity for the end of the year to position for some profit traps, right? Waterfall income strategy too should be totally fine with a bunch of old positions that we have out to the end of November and December and January for profit. Okay, all right, 351. That thing has to be, there it is. $7 debit. Now is up 600. This is now up $650. So if this trade was still live, I'd be taking profit right now, live. Under $7 debit would be awesome. That'd be a $6.50 winner. That allows me to take the risk of, I had a 230 risk and a $1.05 risk. 230, so 230 and 105 minus 655. So I'd be up 320 on the day for my double ups. That works out okay. Ryan says, I think it's a dip, not a buy personally. This is too much. Meaning what? What's too much? You think we're going down to the 20% pullback? You don't think there's a backstop in this market? Do you know how tied to the US markets everything is? Like I'm telling you, if this rolls over and what exactly is going to be the sustained move to the downside? I mean, the pros and cons, right? We have an economy that's still humming along. We have a labor market that is sucky. We have job losses that are happening. We have tech companies that are cutting jobs left and right. They're also coming in Accenture and a Walmart and Amazon. Labor looks bad. Okay. So the Main Street recession doesn't necessarily mean that it's going to pull down the overall markets. I mean, this could be one of the most ridiculous, like K-shaped economies that we have because the markets might keep humming along because Mag 7 is spending. Everything looks good from the ivory towers of, the C-suites and everyone from the president and all the corrupt politicians that are enriching themselves with some of the crazy crap they've been doing in their own trading or their family offices or whatever they have. It's like Wall Street has gains, Main Street has a recession. It's not going to be fun. But we have like built-in circuit breakers. We have, I don't know. I mean, I think everyone that's bearish is talking about the dot-com bubble, the great financial crisis, all these terrible things. Okay. But how long do you have to stick to that narrative? Because all that means to me is at some point, you're right. At some point, yes, the market falls and it falls bad. Okay. So, I mean, it's a dip, not to buy. Yeah. So I'm asking you, are you just selling then? Are you now permanently in the bear camp? Are you just focused on selling? I mean, I'll tell you what I'm doing. I'd love to say I'm going to sell every bear call spread as long, even if the market goes higher, I'm still going to sell bear call spreads because I think the market is kind of running out of steam here. But I just think we need a correction. So what I'm interested in watching for is, do we have a dip? Look, sideways is okay. Sideways is a direction. I mean, for the market to do this by the end of the year, I find that to be very unbelievable. Like, I don't think that's going to happen. Now, I could be wrong. I've got hedges. I've got VIX. I've got long VIX. Like, I've got reasons that would hopefully make me or allow me to manage some of the risk. But I think, maybe the market just takes a freaking breather, man. From the lows to highs is up over 40%. If the market just cools off and has like a 3 to 5% range, that should be totally okay. And then we decide in 2026 or whenever this needs to take place, if this is a weakness window that gives more back, or is this a window that is just, okay, we can buy the dip again. We've had enough consolidation. I don't know. Look, I mean, I am skeptical. I'm cautiously bullish, but I'm not bearish. I mean, I think it's exhausting to be a bear. I've literally seen people be a bear when this happened. They're like, I told you. And then we pivot and they're like, it's still bearish. It's still bearish. It's still bearish. It's still bearish. It's got to be bearish. It's got to be a bubble. This is getting worse. Meanwhile, you're watching traders make money hand over fist if they just traded what they saw. So I think it's crazy to be on one side of the ship or the other side of the ship. It's not all bulls. It's not all bears. You trade, Maybe 2026 at best is just a wild, crazy market. Maybe it's volatile. Maybe it's up and down 5 and 10% swings, but it doesn't really go anywhere. So we'll figure it out. Okay. All right. Let's take a look at other stuff. Gold and silver. We have 5 more minutes before the close. Gold is up on the day. Silver is up on the day. Is this the only dip we're going to see on gold and silver? Again, I hope not. I hope that this is, maybe some choppiness here. It was a 16% pullback on gold. It was a double-digit pullback, I think 10, 11% on gold and 16% on silver. So if it's sideways, it's a pretty big range, but I'd still like to buy those dips if we're offered them. If it's high, low, lower, high, lower, low, I'm happy to scoop up some more silver at better prices. Gold, if this is the only dip or if it's a, pullback to the highs and resistance, support, accumulate more, or if it's high, low, lower, high, lower, low, happy to scoop up some more silver. Oh, baby. Down to $6 now, $700 on the 30 pin. $700. Not bad, not bad. Still taking on a 230 risk with a $1.05 risk, walking away with like $400 profit. And that's not a bad trade. If we get a little bit lower though, this is I don't really want price to go too much lower than 25. Just for profit's sake. I mean, it's up about 650, 625 right now. 3 minutes left. I'm curious where it settles. We're at 68.24. Do we settle lower at 20 or do we pop back up here to like 25 or 30? We'll find out. So that's coming in the final 3 minutes. Price just rolled over slowly all day. So chop fest this morning. We had a nice win on our daily profit play. Put on my iron fly in the middle. Had some profit there. And then late in the day, just flows to the downside. So that trap that I did call for the iron butterfly worked out pretty nicely. It's just I'd be managing the profit now. It's up $500, $600, $700. Take the profit. It's silly to try to get greedy here the last 3 minutes. If it slips down below 20, I'm losing some profit. It comes back to 25 or 30, I gain some profit. But you got a net profit of $500, $600 on the day. I'd say you take it. Okay. AI companies carrying the risk on trade. Bitcoin, Ethereum, way closer to the October 10th bottom than the Qs. Yeah, there was a pretty interesting disconnect there, right? And also, the one thing that was concerning here with this little rip the last couple of days is look at equal weight. Equal weight equal weight hasn't gotten above the highs in October, right? So we clearly have some consolidation going on in the bigger market, not market cap. Like look at SPY, it's up. It just started to roll over today. So if we're getting the rollover here, it's like Mag 7 kind of led the decline today. Look at QQQ. Nice little evening star. If it gets a little bit more bearish to the downside, there's some moving averages here. I still like the idea of can we, by the end of the year, are we still above the 200-day moving average? I don't think that we're going to fall in a straight line, so we'll see. But the good thing is I've got like $112 or $112,000 worth of extrinsic value to extract out of this market in the next probably 60 to 90 days. And that should add up to my bottom line with a lot of my trades still in like the 85 to 95% probability of profit. So I'll nurse that for what I can. If the VIX gets up to above 20 again, we're at 1740 VIX. If we get up above 20 again, I'm probably selling some more premium. Where would I sell premium? Probably back below the April lows. How far am I going? Maybe 30, 60, 90 days. I'll look at some income trades. I'm going to give myself like 15, 20, 25% room for error, and I'll just generate some income. And then I'll figure out what else I want to do on the broader markets. All right, 1 minute left. We're at 68.22. Just spot check this here. So we're trading for $7, $7.75 right now. This is going to be really slippery here in the final minute. 695, 665, 635. Cash settling at 23 and change. 560 cash settled, 580 cash settled. I'm looking to see when this thing stops. So I've got a close price. Got 622, 623, 623 and change. 621. Oh, baby. 622. Okay. Looks like it's a cash settle at 705. Again, not a bad trade. So 1355 minus 705 makes $650 on that iron butterfly. Okay, minus the 230 and minus the 105, a net $300 on the day. That's better than what I did. I did $100 on the day. So there's 315. I'd certainly be happier with that. But I also was out of the trade 3 hours ago and was able to teach a class, not distracted. But yeah, there's a couple $100 I could have made. Cool. All right. What else? Gold, silver, we talked about those. SPY, Qs, market cap probably needs to pull back a little bit. QQQE, equal weighted Nasdaq. Again, barely broke the highs in October, given some back, pretty well supported, but certainly room. Certainly room. Is the holiday rally going to be something that we deal with this year? Is it not going to be? Is this a buy the dip? Is this a wait and see? Is this a stay out of the way? I don't know. A lot of my positions are index wise way down here. If I go Qs, A lot of my index positions are way down here. Okay. We closed out Russell trades. We closed out Dow trades. We closed out SPY trades. Our debit spreads we've taken, we've closed them out. Now I'm looking to see what my strategy two for my waterfall income. Waterfall income, a lot of those trades are, I think I've got levels on the SPX 6,100 by the end of the year. I mean, price can fall. It's like, but certainly I don't want it to fall a ton. But as long as we're staying above this previous resistance by the end of the year, we've got some good profit. So I could see the market softening up a little bit, giving us another 3, 4, 5% correction or so. Does the market make a big deal out of like, oh, the market's down 4%, biggest slide since February, April, whatever. But if it finds any support in here, maybe it doesn't get to the highs. But if we fall 5% and come back to the highs, fall another 5%, come to the highs, it could just be a choppy way to finish the year. The market still had a reflexive rally of 40+%. If we just hang out here, like I said, it could be a distribution cycle at these highs, which does mean we could get a little bit weaker going into the end of the year, at the very, very end of the year, and also into early, 2026. I think the one thing that threw the market off yesterday, in addition to kind of a lot of good stuff getting priced in right away, is that the Fed Watch tool is showing that there is still a 73% chance the Fed is going to cut in December. Despite what Powell said yesterday, I think the Fed members, it was 10-2. 10-2 voted cut, 10 voted cut, 1 voted for 50 basis points, 1 voted for no cut. So there was 2 dissenters. One was I think it was Stephen Marin was cut 50 basis points. He didn't get that, so he did 25. But that's still a high probability that they do cut another 25 basis points in December, and maybe they don't do much into the first part of 2026. But then maybe another one in April, May, or June. So they're still into the 25-25. I think this is something we also have to watch. I've been talking about this the last couple of weeks now. This is not a good sign. In my opinion, if we see another 25 basis points cut in December and we're up 25 basis points here, my concern is that we're doing exactly what we did back in 2024, which is we cut 100 basis points and this went up 100 basis points. Okay. We have cut since September. We cut in September. We've cut 50 basis points and we're down maybe 1/10 of 1%. So my concern is that the bond yields will show higher highs or stickier levels where it's just not going with the Fed funds rate curve. The Fed can't control the long end of the curve. This is long end of the curve. I think that there could be some credit issues. There could be some delinquency issues. There could be some loan and refinancing issues if this doesn't get better. If it doesn't get better, right? So how do we, circumvent that? I don't know. Declare a national housing emergency. Declare a national job emergency. Declare a whatever. I have no idea. But I'm sure there's some tools in the toolkit that the U.S. can come up with to somehow keep financializing the markets. It is in the world economy's best interest to keep the U.S. stable and steady. It's in the U.S. economy's best interest to keep the markets, going higher and trying to somehow thread the needle where labor is not awful and we're not getting like this crazy rise in populism and socialism. But nobody knows this until midterms 2026. So big picture stuff, yeah, there's some concerns, there's some red flags, but I think we trade it. I heard this last night on a show, but it's like pressure is a privilege. I think you should embrace the challenge of turning whatever this market throws at us into a profitable opportunity. So, if the market goes up, great, pretty easy to make money. If the market goes sideways, that's a trader's market. I will probably do very, very well in a sideways market. Market goes down, I'll probably break even. I might have maybe I can eke out 5 or 10% on some premiums and trading some options. But I have a lot of cash and I might just not deploy a bunch of cash. I might just kind of sit it out and wait and then deploy capital at a better price. Right. But if the market's down, I'm probably not going to make money hand over fist as a bear. What I'll do is I'll just acknowledge the discounts of if we have a 20, 30, 40% correction in the stock markets, I'm buying every dip. And that's buying the bear market. Like I'll buy at 20, 30, 40, 50% down. I don't care if it goes lower than that. I don't think the financial institutions are ending. I don't think the world is ending. And I think that's what's so exhausting about watching the Bears. The Bears have been preaching that it's like the end of times, the fourth turning. Look, from the fourth turning, there's lots of disruption. There's chaos. Prices will fall. Heads will roll. There's victims and casualties all over the place. But there's also a ridiculous amount of opportunity. If you have liquidity to buy near the bottoms of anything, you can make a ton of money. So survive it. Find a way to thrive when it's time. We'll figure it out. All right. Amazon had a big day. Natural gas had a big day. Let's see. UNG, yeah, it's up a little bit. I'm long calls on UNG. Amazon, big day to the downside. I mean, Mag 7s are down. Mags was down a pretty decent amount today. So Mag's down 3% from the highs a little bit further. Also, just pulls back to the technicals. We have highs here, 3% lower on Mags from the highs. If we pull back to the 21 or the 50-day moving average, we pull back to this trend line. We come back to test this October 10th low. Watch for this. If we're pulling back into here and it makes a higher low, okay, there's a dip. Is it a concern if we do this? Is it a concern if we do this? We break this low. I think that's a dead cat bounce. And then maybe we come back down again. That's what makes me a little bit more concerned. That better be a bottom. Okay. If it's not, we've got bigger problems. If we're going to get the Mag 7 to roll over like the house of cards, it's going to take the stock market with it. So definitely want to watch the price action there. All right. Any other thoughts, charts, questions? Let's take a look at currency strength today, and I'll let you go. Dollar strong today, Japanese yen weak. Those are really the only outliers. Everything else is totally clustered. What was that headline news from Trump? Obamacare subsidies. It's probably not going to show it now. Let's see here. Tougher fentanyl enforcement, rare earth pause. Okay, whatever. I mean, I don't think the talks necessarily broke down. It's just what is happening. Is it all good? Is it all bad? I mean, the market clearly didn't dump today. It's down, but what's the tape? The tape says S&P down 1%, Q's down 1.5, Dow down 0.29. Okay, Russell down. I mean, again, Russell down less than the Q's, down less than the SPY. It's interesting. VIX is up. It's up a little bit, up to 17. It's not 25 VIX. It's not 30 VIX. So let's see. It's a little caution. I'm happy I took a little profit on the broken butterfly. That's a bonus trade. We get a little caution ahead. That's fine. Let's see if it's orderly or if it's really, really chaotic. If the VIX spikes to 20 plus again, well, prepare for some volatility. But if it's like a slow, steady rise, maybe we get up towards 20, then we suppress volatility again. Let's find out. Come back and trade with me. I'm live. Profit plan every day. Okay. Crowdex says, I'm live like almost every day. If you subscribe to my YouTube channel and click the little notification bell, I go live almost every day. Either I post a video or I'm live for like a 30 or 60 minute segment. Okay. Tomorrow, I do have something I want to share tomorrow for practical options. This is a foundational course that I built. The intention was anybody that ever asks me, Chris, I hear you talk about options a lot. I have no idea how to trade them. Where can I start? I built this for you. I built this for my nephews. I built this for my, fiance. I built this for my brother. I built this for anybody that's asked me over the years. I hear you talk about options. I have no idea what that means. Can I learn? So the quick guide is $27. The full course is $497. It is 13 of my favorite option strategies. There's a PDF that goes with it. I'm going to do a free workshop. Yes, I do FX as well. I'm still trading FX. I've been trading FX since like 2007. So I still do it. It's more passive for me though. Like I'm not super scalpy and day trading on FOREX. I'm mostly just position trading and low leverage. Like I trade like micros and mini lots on a 6-figure account and just grind out, I try to grind out like 10, 15, $20,000. It's been like a, 14, 15, 20% plus years on Forex for a long time. But I do it really, it's boring. It's super boring. Not boring for me, but boring for like, I want to follow alerts from you. Well, be prepared to take like 50 trades on one currency pair, build a position up, and then take a ton of profit in 6 months. That's how I trade Forex. So it's tough to teach that because you have to have a ton of patience and a lot of conviction. And I'm literally holding trades I've been in on the Swiss francs for 2 years, and they're not profitable. They're also within a, I don't know, 10% drawdown. So I'm managing that drawdown. I'm not worried about it, but I'm obviously watching to see, like, when I get my turns, then I start measuring some trades, then I start adding some more positions. And when I turn them profitable, they'll be big. I'm trying to make, I'll probably push closer to like maybe 30, 40% returns because I've been in them for a while. On top of that, I do have a positive swap on those positions. So anyway, a little bit of everything. But I will say this on my practical options, it is a free workshop tomorrow. So if you'd like to join me, I don't know why this isn't popping up here, but Friday, I'll post this in. So practical options workshop. It's going to be Friday, 2 p.m. Eastern time. It's going to be on my YouTube channel, youtube.com/Chris Pulver. And I'll also put out, I'll probably push a Zoom link out. So I've got a Telegram channel here. I'll probably push out a Zoom link and see if I can get a bunch of people into it between my Zoom link and my YouTube channel. I'm going to see how many people I can get. If I can get, 500 to 1,000 people in the room tomorrow, that'd be awesome. Let's talk some shop. So practical options, here's what it looks like. If you want to click on the link, I have a $27 starter course. You can get your feet wet. It comes with a little 30-page strategy guide, buying calls and buying puts, bullish spreads. So there's debit spreads and credit spreads, bearish spreads. There's debit spreads and credit spreads. This is a very simple way to make some sense of you're starting to play some chess in the markets. It's always define risk. The market could literally go to the moon or go to zero, and you're only going to risk what you put on the trade. You talk about risk-adjusted returns. You're playing with a house edge that's about 55% bullish, always. In this year, after we had the downturn in April, it's been like a 90% house edge that the market is bullish. Yes, we've had some fluctuations along the way, but this has been a bull market like paradise since the bottom in April. Is it always going to be this way? No, but it's been pretty freaking sweet. If you had the courage to participate since April, May, June, July, August, September, October, it's been pushing higher, higher, higher. Here we are near the end of the month, little weakness window. It is what it is. But I love options. I've migrated, almost 90+% of my capital into trading indexes, stocks, options, futures, Forex, crypto. But a lot of options, a lot of ownership, a lot of premiums, a lot of income trading. I don't own a lot of stock. I trade a lot of options. So it's been a huge game changer for me the last decade. And my risk adjusted returns are been as good as ever in my career. And if I can help share some of this knowledge and help get you started somewhere where I think this is just one of the best assets to trade, a lot of people love options. And what's insane is literally the futures market and the options market is probably responsible for 70 to 80% of all flows in the markets. Like literally options, sometimes the daily option volume, if you go out like 1 day or 0 day, it's 50 to 60% of the option volume is within 1 day. If you go out to like 7 days, you have like 60 to 70% of all option volume on everything. So, indexes and individual stocks going out to those major Friday expirations. So anyway, it's fun to teach a couple core strategies. My goal tomorrow is let's have a practical options workshop. If you're interested, I think the great place to get started is this $27. Get you started. Give me some feedback. You can, hit me up in my live sessions. These are free every single day. I do these sessions every day at 9 a.m. Eastern time. And you can hit me up in my Discord channel. You can comment anytime on YouTube. So the point is I'm here to help. And I think it's been a revolutionary way for me to trade better and be more profitable and be better with risk. And I think if I can show you what it's helped me do over the years, I think it'll make a lot of sense. And if I can teach a teenager how to trade options and I can teach an 80-year-old how to trade options, I think you've got a lot of people there that are in the middle. Somewhere between, I can teach young and old how to trade some options. I think will help. Which one? Which one? Was it the what? The Unlucky Investor's Guide to Option Trading? Was that the math one from Julia Spina? Was it that book? Or was it there's a couple books, either the Unlucky Investor's Guide to Trading Options from Julia Spina. She's a tasty trade person or tasty live person. Really good book, very mathematical, lots of probabilities, lots of distribution curves, and it's math. But that's for math and probabilities. Yep, that's it. Unlucky. Okay, the other one is Brian Overby. He's with Options Play. Brian Overby wrote a really good playbook called the Options Playbook. There's some other ones. There's one like simpler options and simple options or something. It's kind of like a old textbook, but has all the bells and whistles you'd want. Again, I'm not trying to teach it that way. I'm trying to teach things that are very simple. Like I'm trying to teach it in a way like if this is what I want to do in the market, here's what I'm going to do to trade it. So I'm not going into the details of all the Greeks. I do that in my full course as a nod to the terms and to help you with the learning curve, because when people talk options, they say all sorts of stupid stuff and they sound really smart, but what does it actually mean? So that's what practical options is. I try to just, you know, not make it complicated. Let's make it so if we want to trade options, we can do it in a couple of weeks and understand what the heck we're doing and feel like we're not lost in the language and lost in the intimidation factor of like, man, this is a crazy learning curve. Doesn't have to be. Okay. Yep, I'll share the link. So if I go to the $27 course right here, I'll post in the chat. I think it's a great place to get started. And again, I welcome your feedback. If you buy the class from me for 27 bucks, awesome. Hit me up in Discord. I'll send you the guide. I do a walkthrough video in it here. If you want the guide, it's like 30 pages. If you buy the full course, which is this link, so if you like the $27 course, you want the upgrade, I've got a lot more videos there, and it's not copy. This is all brand new content. So I go through an intro just to welcome you, and then key terms, stuff that I really don't like teaching, but at least it helps you understand when I say stuff about a call option, or I say something about delta, or I say something about a debit or credit, or a bull call or bear call, or blah blah blah. Those terms make sense. A risk graph, some things that are really confusing. If price is here, if it's up or down, where's my P&L out, where's my break even? Sometimes those risk graphs are very confusing. So I detail the strategies and I show you what they look like on a risk graph. Options chain, navigating a broker platform. I do this on Thinkorswim, on Tasty Trade, on I think it's on the like Webull and Robinhood. I do this on like 4 or 5 different broker platforms. They're all pretty much the same, but everyone sees their broker platform looks slightly different than mine. And I just want to make sure, like, yeah, you find your calls, you find your puts, you can trade an option. Find your expirations, find your asset, you can trade an option. Strategy guide, 70 plus pages. So it's a little bit more robust, a little bit more thorough because of all this extra stuff. And then we get into the strategies. Buying calls, buying puts, and best practices, bullish spreads and bearish spreads, best practices, calendar spreads, butterfly spreads, and neutral trades like strangles and iron condors. It's a lot of stuff. But if you like the concept of risk defined, if you like the concept of never having to own a stock and finding ways to generate income, you like the fact of the markets. If we have a broad bull market, there's lots of ways to make money in a bull market. If you think we have a sustainable bear market, there's lots of ways to make money in a bear market. But for the most part, this is ways to trade and make money trading rather than having to have all your cash invested in the S&P, right? I mean, if you have a 401k and you have a targeted fund because you retire in 2050, you know what your exposure is? You're probably 70% equities, maybe 80% equities, and then 20% bonds. And that's it. And you ride with the flow. You go with the flow, you roll with the ebbs and flows of the market. If we have a nasty bear market, you are going to see your 401k lose 20, 30% of its value, which sucks, right? So I think you should take a little bit more financial responsibility and care about protecting your portfolio better. Anyway. All right. Good stuff. So if you're interested, check it out. There's the quick guide. If you want the full course, here's the full course. There you go. And then tomorrow morning, I'll be live on my daily profit play. That is live every single day at 9 a.m. And then when we come to our practical options workshop, that's going to be at 2 p.m. Eastern time. Did I post that? YouTube. Yeah. So the workshop is 2 p.m. Eastern time. I will put this on my YouTube channel, and this will be like a practical options workshop. I'll make a thumbnail for it. It'll be sitting in my video list somewhere. YouTube.com/Chris Pulver. Cool. All right. Look, good stuff today. Net profit on the day overall. Market's pulling back a little bit. Totally fine. My P&L down on the day was mostly Tesla. It's not like I don't have trades at risk. It's just the fluctuating open positions that I have. So I had a pullback of 53,000 out of. So I had a 1% pullback today. Okay. I'm okay. It's like if it gets worse, I mean, we'll see. My trades are all pretty forgiving at this point. I've got a lot of room for error, but volatility is volatility. So if things get a little dicey, then I'll take on some heat, but it's not necessarily losing trades. It's just, I need time to settle. So there's my, extrinsic value. There's my, daily theta decay. So, I mean, I've got money rolling in like every day. It's just, I need some time. I need to make sure that we don't kind of come unhinged by the end of the year, and we'll see how the markets go. And I also have some crazy hedges that are, 15 to 1 and 30 to 1 and 40 to 1 if I need them. Anyway, all right. I'll let you go. Come see you tomorrow. All right. Take care, everybody. Bye.